value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report, online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Joseph.
My pleasure, Jim. Good to be with you again.
What kind of impact is it going to have on the Canadian oil industry with President Biden signing an order canceling the Keystone XL pipeline?
Yeah, this is a bit of a problem because right now Canada, as of last week, shipped 3.96 million barrels of crude oil to the U.S. That's up about 3% from a year ago. And right now we provide 56% or so of U.S. imports. Mexico is second with about 600,000 barrels a day. But this pipeline of 830,000 barrels a day was supposed to give us more growth for thermal and for heavy oil and potentially, more oil sands expansion phases. So that growth has been taken away. And of course, the province of Alberta has spent a fortune on this between, direct money and loan guarantees, etc. So if, the conversation tomorrow between the Prime Minister and President Biden doesn't have any, give in it, where they might look at all the environmental things being done in Canada to make our industry much more competitive and much more environmentally sensitive and much ahead of course, the USA, then that's snookered. The one that bothers me even more, though, is the Enbridge Line 3 and 5. Environmentalists are against it. In the case of the Michigan governor, she's against it. So if that one doesn't go through, that is a real problem, because that means that oil doesn't go from here to into Ontario and Quebec to the refineries there. And so we're going to have to find new ways to get our own oil to eastern Canada. And, I don't know if the retaliatory situation becomes where if they really shut us down, do we shut out Marcellus gas, which is coming into Ontario and Quebec, and that means more Canadian gas goes through the Trans-Canada Canadian system to meet the markets in eastern Canada. So this is getting ugly, and, again, this is a nasty problem for the Prime Minister, and of course, very detrimental to the province of Alberta. And so it's taking a little bit of the joy out of the Canadian market. The TSX, which S&P TSX Energy Index, which was 103 about a week ago, it's down 1.7% today to 97. So it's taken off about 6-7%. Just in a week.
Quebec and Ontario, just a short while ago, were complaining about a shortage of propane and other petroleum products because they couldn't get them from the U.S. Have the arguments not been made about Canadian supplies being a whole lot more reliable?
I think that's probably the case. The key thing is how do you transport it there? Is that something that can be transported in the current pipeline system? Is that going to have to go by rail cars? The rail industry, of course, would love to have the extra business, but do we have the right cars to move the product? I don't have the expertise to give you an answer on that, but I think that that just adds more complication to the problem that we're going to see for the basic crude oil and potentially natural gas issues in the next year or two, if the Biden administration continues with this program of being aggressive on projects that have environmental sensitivity and of course ESG and methane releases and the whole climate change issue. And the Canadian industry is much ahead in terms of disclosure Many companies have ESG reports. Not American companies are way behind versus what we're doing. Companies here are focused on CO2, methane emissions, instead of using diesel on rigs or for fracking, they're using, electricity and biofuels and, different things that they can do. So, I think that, we're getting a bad, rap here, and I think, people should be looking at the facts and how much improvement has happened. But that seems to, the Biden administration, I think, is playing to the political side of of their party that wants to see very aggressive action.
I think Aramco was picked out for failing to disclose what kind of greenhouse emissions they're making. And have the Arab countries made any promises, or Saudi Arabia, about maybe full disclosure?
I haven't seen anything. I think UAE. I've seen maybe some articles where they're talking about using more natural gas and working on more wind farms and and solar and stuff like that. But you've seen Saudi Arabia again using more solar. But again, I think they're way behind, and disclosure on ESG is going to be required because of the if they want to go. I think they're only listed on the Saudi Arabia Stock Exchange right now for Aramco. But if they want to go on the UK or the New York Stock Exchange or Hong Kong, they would probably have to expand the disclosures.
We'll have more with Josef Schachter right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Josef Schachter. Joseph, what kind of problems is Enbridge having with its Michigan replacement line?
Yeah, they want to have replace one of the lines that goes under rivers and then goes through, under the lakes. And so the governor, Whitman, I think is the governor of Michigan, is against it. There's also some tribal, instead of First Nations like we call them here, tribal, problems with getting approvals to go for it. They've been working on it. They've gotten the federal government approvals under the Trump administration. But now that you've got the Biden administration being, saying that anything that goes between states and between the national borders is now under the jurisdiction where President Biden can change the game, as we're seeing for the XL issue. That I think is problematic, and that is really the line that's right now running. And if that line has to close, that means we lose that market and that ability to deliver oil into the eastern USA and into Ontario and Quebec, as I mentioned earlier. So to me, that one is of more immediate concern. XL was to give us growth. This takes away from the actual volumes we're moving today.
What's today's EIS data, and can you tell me what EIS stands for?
Oh, it should be EIA,
okay.
The Energy Information Administration, the weekly energy report that we look at to see if the storage went up. I thought it was going to happen today, so when I sent you the notes, I thought we were going to be talking about that, but they've made a decision because normally if you have Martin Luther King Day or Monday, then they release data that's supposed to be Wednesday on Thursday, but because of the inauguration, they also moved it one more day to Friday, so it'll be a subject matter for tomorrow, and we'll write that up in our Eye on Energy. So as we mentioned before, we have a free product for people who want to just keep up with the macro side, and people can just go to our website and they can subscribe to the free product, the Eye on Energy. Our normal product is our subscriber product, which talks more in detail on the macro side, but covers individual companies, and that's the normal product.
Well, Joseph, what do you think they're going to tell us? Because you're usually so far ahead of the curve.
The API report, which announced that there was a build of about 2.5 million barrels. I can't remember the number. So we're looking at the EIA number to be a build. The question is going to be always, everybody looks at that commercial crude stock number, and they forget to look at what's happened with product. And so where's the gasoline number? Where's the distillate number? So we've had weeks where you have an increase or a decrease in the number for the crude oil, but then there's a higher number increase from gasoline and distillates, and that's because refinery runs went up. So the refineries took down the crude oil, created product, but the product that they created was more than the volume that the crude oil was. So when I would write these reports up, I'd say, well, everybody got excited by this. This data really is mixed. It's not good news, simply because it was offset by these other numbers which showed inventory growth. The other issue is, of course, exports. If exports fall, then you're going to, then that has an impact on the number. If exports rise, then that means the crude oil volumes come down, but it's all related to a weekly change in exports, and that number can swing around very, very widely between, rising and falling, depending upon, if China bought that week.
Is there any more action on Alberta either building a resource railway through the Northwest Territories to deliver oil, or building a pipeline from Alberta through the Northwest Territories to the Arctic Ocean?
I haven't seen anything, but I think that with all these problems with the southern, delivery system being impacted here, both for TransCanada and Enbridge potentially, I think we're going to have to start looking at northern access routes. So I think that he's got enough. The Premier's got enough on his plate right now. Billions of dollars in the hole between the money that's been spent, the guarantees. 1,000 workers just got laid off by TransCanada, and the construction is stopping on the routes that were being built. So it's a real big mess. But once they get through this problem and find out if the legal suits and the legal challenges will resolve it to some extent, I think we're going to have to start looking for alternative routes, and the route through to the north of Canada and then through to Alaska makes a lot of sense.
I was just going to ask, is there the possibility of lawsuits to recover the money already spent on the Keystone Pipeline?
I'm not a lawyer, but I know the province has hired both a Canadian law firm and an American law firm, as you saw from Kenny's discussion yesterday, and they're looking at all their options. But again, if the federal government can change the rules, and that when you sign, the contract and spend the money, then it's almost like Kenny was praying for a Trump re-election, and the Biden election has thrown his plans of a recovery in the oil space into the garbage can, and I think it's made it very difficult for Alberta to see a recovery in this year unless oil prices rise. After we get to herd immunity, some people are running around still with $60 targets for the price of crude oil in Q4. But again, I've been, in that camp too. But if herd immunity doesn't come until Q3, Q4, then we won't see the recovery in the demand side. Right now, consumption worldwide is about 94 million barrels. Prior to coronavirus, it's 101, 102 million. So we're looking at a big decline, and that difference is the U.S. volumes that fell off and the OPEC cutbacks. So we're sitting with probably just a little balance of oversupply. That includes the million barrels that Saudi's pulling out of the market in February and March. But heading into April, May, June, before the summer driving season, it's likely we're going to see a build. And at the same time, of course, the virus and the worst days ahead, according to President Biden in his comments yesterday and today. So I'm in the camp that we may be looking at a resolution, but a lot later, maybe 2, 3, 4 months later than the optimistic Q2 was going back months ago.
We'll have more with Josef Schachter right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU.
For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, you put out a sell signal last week. What's going on there?
Yeah, we've been, we put out a buy signal in March 13th, and added quite a few names and reiterated buys on everything from the large cap natural gas stocks like Tourmaline, the big cap oils, White Cap, and some of the drilling names like Precision, etc., on the service sector, and that worked out extremely well, outperforming both the S&P move, the S&P TSX Energy move, and the Dow and the TSX. So we started getting indicators from the different indicators that we watch that we're getting overbought, and that it's time to pull the trigger on a sell. And we usually get maybe one of those once every year or two. So we got the buy in March of 2020, and now we got the sell January 14th of 2021. So we put out a sell. We had 25 ideas on our action alert buy list. We removed 14 of them and said, harvest them, take your profits, and go to the sidelines, hold cash. And potentially we could see a 2 or 3 month severe correction. As I mentioned earlier in our conversation, we're already off 6-7% on the TSX Energy Index. And things like Precision Drilling were sitting around $32 are now $27. So we're already seeing some erosion in the names. So the sell program that we recommended to our subscribers has worked. And we expect we're going to see that TSX Energy Index, which is now sitting in that 97 level that I mentioned a few minutes ago, that we're going to probably see that below 60, which means there's still a lot of downside here. And but I think sometime in April we might get another buy signal. So we're telling our clients that we're going to keep them up on the ideas, come up with prices that we think are attractive. And then, of course, inform them for the paid subscribers when we get the next action alert buy. Hopefully we get something like that in April, and that gives us another great buying opportunity like it did in March.
Has there been much oil and gas drilling going on? And if there hasn't been, could that lead to a shortage in the not-too-distant future?
The industry in Canada and the United States is cut spending significantly versus last year. The oil and gas industry in Canada is talking about a bit of an uptick in drilling in 2021 versus 2020. But the big issue is the large companies, the multinationals, the Exxons, the Chevrons, the other big guys are talking about spending less this year, especially on things like the shale plays, the Permian, etc. Exxon, for example, is now worried about having the SEC breathe down their neck that they should take some significant write-downs on their assets that they bought, which of course are not worth what they were a few years ago. And so there's some pressure on the industry there. The big issue, though, is that, with OPEC having, 7 million barrels still to be brought back on, that gives you a lot of breathing room, into 2022, 2023 before that everything tightens up. And then depending on where prices are, if we're in the 50s, the industry in Canada and the United States can replace the declines if it's 50 U.S. dollars per WTI, and we're 52 or so today. If you get to 60, the industry will probably spend more money and show a little bit of growth. So the U.S. is right now producing, I think, about 11 million barrels a day, and it was producing 2 million barrels higher than that at the high, in the first quarter of last year. I think that, anything in that 60, 70 range is going to cause back increases in spending to get the volumes up, growing again. Maybe not up to the same levels at the high in Q1 of 2020, but if you see prices go down below 40, which is what I'm believing and I'm concerned about right now, and that's why I'm bearish. Part of it, of course, is the pandemic is going to take longer, and getting the vaccines out is going to take longer. The mutations are going to maybe mean that the vaccines need to be changed. Getting the second dose, is being delayed versus the 21 days that Pfizer recommended, 28 days of Moderna. If they delay it by 3 or 6 months, are they, as efficacious? And so there's a lot of concerns here now. And that's why I think we're going to see some erosion in the energy market and probably in the general stock market here, as people don't see the recovery happening as quickly as previous thought.
Your view on the next few months in the oil and gas business and going into next year?
Yeah, I think, as I mentioned, that the 97 for the S&P TSX is probably going to go down below 60. We were down at 38 in March, so anything under 60, I'll start looking for that buy signal and looking at all the indicators that I will look at to see if we're getting close to it. And then when that time comes, we'll send out the action alert to our subscribers and add names back on the buy list. But I think heading into the fourth quarter, if it looks like herd immunity is happening and we've had our buy signal, I think we'll see prices start moving up above the 54 range, which was the high recently. And once we bust above that, that's going to be very positive for the sector. So I think that heading into Q4 and then into the first half of 2022, we're looking at a very significant upside from here. We could be 140, 150 on that index. But the question is, are we going there from 60 or either going from the 97 today? I think we're going to come from the 60. So I'd rather be sitting on the sidelines with the cash, wait for the market to get shellacked, and then just know my stories, keep up with the names, which is what we do in our reports, so people have the understanding of what we're looking for. Q4 results will start coming out in the next week or two, and we'll be updating people on that. We're already seeing numbers come out in the States. Halliburton reported, Baker Hughes reported today, tomorrow Schlumberger reports. So we'll get information on the service sector, both in the States now and Canada in the next few weeks. And then, of course, we'll get the producers, E&P producers, starting to report as well. And so we'll update our clients on the results and how they did versus our forecast and expectation, and then come up with ideas of what price might be attractive to re-enter the stories that we removed and said sell last week.
The Biden administration says it's going to concentrate on alternative energy. Is that bad news for oil and gas? And will people be buying so many electric cars that they won't be gassing up their cars?
Well, the electric car, is really, going to be the big growth. I think there's 8 million cars on the road this year. Most of the growth, the growth has been, and the demand has been coming from China, but Scandinavia has been a big market, and those are growing. Again, subsidies help to do that. But I think the industry, the green industry has had such an unbelievable run. Look at Ballard Power in your city. The stock is, I think, it's tripled in the last year, if the numbers are correct. So I think that the green stocks are probably overvalued at this point, but they do have a very attractive long-term potential, both solar and wind and hydrogen and all the rest of it. So if we do see a correction, I'd be looking at that area for buys. But I think the basic energy sector, the fossil fuels, especially light oil and natural gas liquids, is a growth business over the next few years, because we need a transition, because even if the amount of money that people talk about being spent on renewables happens, it's not going to grow from, I think it's maybe 5-6% of total energy production. Maybe it goes to 20 or 30 in terms of total usage, but it's not going to totally displace. Where the displacement will come on coal and nuclear, and maybe crude oil will be used more for petrochemicals, not as much for countries that can get the EV market going. The assumption that EVs are going to be 70-80% of car sales by 2030 or so, I think is totally irrational. There's no way that can happen. It's going to take a lot longer. And even if it did happen in, say Los Angeles or Stockholm or London, you still got the rest of, India is not going to happen. A lot of rural China outside of, let's say, the coast, the east coast of China, where the major cities are, and where they're pushing EVs because they want to have better quality air. The big problem is when you get away from those coastal areas where they're pushing EVs, you're going to see a lot more still of fossil fuels. And then if you have population growth in India, other places in Asia, they're going to still be using cars, diesel and regular gasoline. And then of course you look at South America and you look at Africa, all those areas are going to continue to grow. So when you look at forecasts where they say, energy demand, which let's say is 94 now, was 101, 102 in the first quarter of last year, it's maybe only going to go to 95, and then some forecasters, really environmentalists are saying, that number can go below 70 or 80. My view is that even if you do bring all of the environmental things into the industrialized countries and the major urban centers, the growth in these international areas probably takes you to 105 million by the end of this decade, 2030, and it'll still be growing into 2040. So the assumption that we're going to see a negative and less demand for crude oil, I think, is irrational. And remember, we have decline rates. So if you have worldwide decline rates of 8 to 10%, you've got to find 8 to 10% new oil every year just to keep capacity at where it is now. And in Canada, most of the decline rates are in the 20% plus range. So if we're producing 5 million barrels a day, we've got to come up with 1 million barrels by the drill bit. But a lot of that, of course, is oil sands. So let's take out 3 million of that for oil sands. Then you've got to come up with 2 million times, let's say 20%. You've got to come up with 400,000 barrels a day of new production, which means you've got to spend money on drilling wells.
The propagandists funded by the Middle Eastern oil companies have said Alberta's oil sands are so dirty nobody should buy that oil. How dirty is it, and how clean can it be?
Well, the industry is working very hard to do the things of better use of water, methane emissions, CO2 emissions. They're talking, if you look at Suncor or CNQ, they're all talking about getting to neutral, by within 10 years, 2030, some 2035. They're doing a lot of things to improve their environmental footprint. And so I think that do you want countries that are dictatorships that are at war, and or do you want to have oil from Canada, which is cleaning itself up more and more? I'm more optimistic, as I said, on the lighter barrels than the heavier barrels, and the reason I'm concerned about the heavier barrels is twofold. One, the issue of this whole pipeline concern, where we're not going to have more pipes down into the States to move incremental barrels. But the other one is concerning is that we gained, our production's gone up by 2 million barrels over the last decade or so, because Mexico's production of heavy oils, Mayan heavy oil, came down because they didn't reinvest in the industry, and of course Venezuela. So if there's going to be, and right now we're seeing the Mexican numbers go up. Last week, for example, Mexico's increase was from 520,000 barrels a day the week before to 600,000 to the States, and their overall production numbers are growing. So they are finally getting their act together with the money that Pemex is spending to replace declines, and then sell more to the international market, which is the U.S., because it's the oil is heavy oil, and it just goes through the Gulf of Mexico to the U.S. refineries on the Gulf Coast. The one that's the wild card is Venezuela. If Maduro's gone, and there's a new government that takes place, and Biden's pressure on them to change regime, or Maduro opens it up and brings the opposition into the power structure, then over time the sanctions will be removed, and potentially, you look at Venezuela, which might be producing, 300,000 barrels a day now. They had a history of producing 2.5, 3 million barrels a day. It'll take time to bring that production on, because a lot of their facilities, pipelines, and the rest of it has not been well maintained, and it will take time to get them back in to full utilization. But that is a risk for us, because if you have production coming on from Venezuela, and the distance from Venezuela to the Gulf Coast might be $3-4 a barrel in shipping, our shipping costs are $8 from Canada, assuming we have pipe. If not, rail is $12 a barrel. The economics would move in favor of Venezuela again, and we would lose our market share on the Gulf Coast. That's, to me, is the bigger risk for the oil sands and thermal oil in this country.
Josef, thank you so much for chatting with us.
It's my pleasure always. Take good care, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Josef or any of our other guests, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.